But I'm going live. Huh? Good evening to each and everyone gathered here. For the today's much-awaited multi-bagger event, we have with us our CEO and founder, Dr. Mohit Batra, where he'll replace some existing stocks in the multi-bagger portfolio. He'll also explain methods to spot multi-bagger and will also explain how to achieve high returns with low risk. Drop your questions in the Q&A box below the video on any concerns you may have, and Mohit would try answering all of them. Over to you, Dr. Mohit.
Well, thanks a lot. A very good evening to all of you. Let's start this multi-bagger series that we used to run around 3 months back, and then, for the last 3 to 4 months, we haven't, or I think a little more than that, we haven't had a chance to go through the whole multi-bagger strategy. I'm doing this webinar very specifically to meet up with the huge set of demand that is there for this particular webinar. And trying to continue the same place where we left last time and trying and seeing what has happened to that portfolio and how we can add/remove stocks from that particular portfolio. Before we start today's proceedings, I would like all of us to pay a huge homage, a huge gratitude to Mr. Jhunjhunwala for imbibing the retail investor confidence into the equity markets. Knowing him, I personally worked under him. Knowing him personally has taught so many beautiful things, not just to me, but to the whole set of investor base over decades now, that we all need to pay our respect and homage to such a beautiful investor, a beautiful man, and such a perpetual bull. He was not just a big bull, but he was a perpetual bull. I think in my years of interaction with him, I have never seen a shade of doubt where he has ever been bearish on the Indian markets, on the Indian economy, on the way India is shaping up. And I think the result of that can be seen very worthily in his net worth, which is very well deserved for somebody who is not just believed in the investing philosophy, but believed in the place where he has invested. There are certain very interesting episodes that come to my mind over the weekend, which I thought I would share with you quickly for 2-3 minutes as my personal learning. One was the intellect that I have seen in any human. I'm not just talking about an expert. I'm not talking about an expert of any area, but I'm talking about the intellect of a human. I think he was par excellence. There is nobody that I have seen with better intellect on the area of expertise that you deal with than Mr. Rakesh Jhunjhunwala. He had a grasp on numbers which was beyond imagination. Beyond imagination. You could ask him numbers, you could ask him annual report numbers, you can ask him balance sheet numbers, you could ask him progress numbers, you can even ask him quarterly results number, and those were always on the tip of his tongue. He knew the markets, he knew his numbers inside out. There has been numerous amount of instances where I personally presented to him, and when I was doing my presentation, he would invariably close his eyes and, he would take a snooze. He would doze off. He had this tongue twisting ailment which, made him sleep more often or maybe doze off for very small, frequent, very small intervals of time in between. And whenever I used to do the presentation, people around me used to tell me that please keep speaking because he's listening to everything. He may be sleeping, but he's listening. And, the first time that this happened, I just couldn't believe it. And it was, I think I was doing a 40-50 slide presentation to him. And when the presentation got over, he opened his eyes, I think even after 5 minutes, he was still dozing off. He opened up his eyes, and I think, if I'm not remembering right, please excuse me, but he said that go to slide number 23 and explain me that number again. So that was the magic of this man. That was the magic of the depth at which he used to go at his subject. And that is, on the outside, we know him as somebody who's well connected, who knows people, investors, companies want him to invest or wanted him to invest in himself, but nobody knows him as closely as some of the people who worked with him, and where we've seen the true magic of a man that Rakesh Jhunjhunwala was. Some of the things that he taught us in life was not to take life too seriously. Failures was something that he has taken so nicely on his chest. There was, companies that I know that he invested where he lost large sums of money, and the smile that he had on his face, the way that he could take those failures and move forward and still have conviction in the markets, in the strategy that he's adopting, was phenomenal. You would know that if our portfolio goes down of 15-20%, or if some stock that we hold goes down 20-30%, how difficult it becomes for normal investors to cope up with that particular loss, or to get beyond that loss psychologically in our mind. That was not the case. In fact, it made him more fearless when he took some losses and he went back into the conviction areas. He took double the bets in the conviction areas, and that's how that wealth has been created over a period of time. For business owners, for people who are entrepreneurs, he had very nice, simple philosophies in place where he used to look at what is the problem that you're trying to solve. He used to give you a brilliant perspective to life in terms of how you should imagine that cost is reality and revenue is a dream. So when you're building up your cost in a startup or in any business, you should know that that cost will come. The revenue projections will not come. This is one of the most important things that I learned from him. And I would like to attribute a large portion of Markets Mojo's success to some of the learnings that he gave me personally, as not just an investor, but as a business owner, that whenever you're doing revenue projections, be very, very humble. But whenever you're doing cost projections, be absolutely ridiculously high, because the cost will become a reality and revenue will remain a dream. One of the key things that a lot of investors don't do, a lot of analysts don't do, a lot of fund managers don't do, what I saw him doing was the amazing sense of grip that he had on reading balance sheets. He used to love the balance sheets. He used to love balance sheets because it was the purest form of financial instrument that he felt. Despite having a P&L or an annual report, having the assets and liability in front of him, having an understanding of what is happening behind that balance sheet was his main strength on analyzing any company. So if you put any piece of a document in front of him, he would always say, show me the balance sheet, because he knew that nobody could read that balance sheet better than him. And it would take him just about 4 or 5 minutes to just throw a balance sheet aside, or maybe say that I want to review this in detail. But his grip on understanding assets and liability and what is going as per the growth of a company, as per of how the company can do in the future, or as per how debt can create havoc, or how lack of debt in the company shows that the growth prospects may be low. All of that mix of various things that come in terms of understanding the balance sheet was something that he was brilliant at. So wherever Mr. Jhunjhunwala, he's watching us, we are treading on a path that he actually made for the retail investors to succeed in the market, and Team Markets Mojo is hugely indebted to him for showing us the way, for showing us the path, for making us believe in India, for making us believe in the Indian story, and we are following exactly what he would do for himself in terms of that conviction that we bring about to each one of you in our individual strengths to retail investors. With that note, we will start the proceedings today. Multibagger is our endeavor to pick up certain set of stocks which goes through a IP drill process. And as you know that Mojo Stocks is a large list, as you know that the master list of strong buys that we have is a large list. How do you cull down to certain set of stocks which show the most prospect for tomorrow's multibaggers? That is this whole webinar and the agenda, and we will go down to very detailed set of numbers today. I would stop by at any kind of a slide where I feel that you need to take a picture. So we'll have a picture time on the slides, and then we'll open up in the end on the Q&A. Before we get into the multibaggers, I need a screen share, please. I would like to do this announcement that I did on Friday once again to you that Markets Mojo is becoming a stock advisory, do-it-yourself company. This is happening with effect of this week, and Mojo Infinity is where all the assets businesses will reside, which will include Infinity portfolios, model portfolios, and the portfolio optimizer. We would be charging even the model portfolios at 2%. So this is something that will start happening in this week onwards. We are coming and doing a big launch of Mojo Infinity in terms of the model portfolio becoming a part of the Mojo Infinity umbrella. Now, for all the users, Mojo professional users who have model portfolio in their package, they don't need to worry, they don't need to pay anything. That will continue as it is. This is exactly for new set of investors who are coming in and they are becoming a member of Mojo Professional. They will not get model portfolio. Model portfolio they can get on Mojo Infinity at a 2% fees. The remaining set of investors which are esteemed Mojo Professional users, long users, 5 years, 10 years, 15 years will obviously keep getting their model portfolios free of cost within their Mojo Professional pack. The price of the Mojo Professional pack, as you know, we have held together at around 19,999. We are increasing that to 23,999 for 2 years. And obviously, the model portfolio will not be a part of it. Now, our big plan out here, as I discussed on the big launch on Friday, is that Markets Mojo will go in for a broking license. We want to give the facility of transaction to our Mojo Professional users, and Mojo Infinity will go initially with a PMS license, and if that does well, we will obviously go in for the AMC license, which is the mutual fund license there. What does that mean for Mojo Professional users? And this is a big happy news for all the Mojo Professional users. For the tenure that you are a Mojo Professional user, be it 5 years, be it 2 years, be it 10 years, we will actually do broking absolutely free, which means that not just cash delivery, FNOs, everything including model portfolios will be at zero cost. You do not need to, once we have that license, you do not need to do your transactions anywhere. We will get the whole industry down to zero for you because you are our advisory clients, and advisory clients do not need to pay any brokerage. So we will give this facility to all Mojo Professional users moving forward. Only till the main thing that you need to know out here is that till your membership is valid. Once your Mojo membership expires, obviously these will become market rates. This is only till the validity of Mojo Professional pack. Now, this week, model portfolio goes at 2% for non-Mojo Professional users, where the Mojo Professional membership has expired. Obviously, they will have to take a stock advisory pack, but the model portfolio will not be a part of it. A lot of you have come back to us and said that, and I can see the response over the last 2-3 days where a lot of you have wanted to extend your Mojo Professional pack with model portfolio one last time with the broking facility whenever we come out with at zero cost as long as possible. So this is not just any offer that we are doing this time around. This is a last chance we are giving to all Mojo Professional users that for the very last time you're seeing model portfolio as a part of Mojo Professional service. We are giving it for just about a day or two more before we launch our Infinity service for model portfolios. And we have not tried to leave any stone behind. We have given our best offer out here. So basically what you can now do is get the Mojo Professional Pack with the model portfolios, with the optimizer at 19,999 for 2 years, and we are giving 6 months free. 6 months free along with 19,999 is our lowest offer, where we've also included for the time being model portfolios and portfolio optimizer. Please make sure, and I'm begging you again, please make sure that this is not something that will be an offer in the month of September, October, because we are doing a business shift this time, which means that model portfolio will never be a part of Mojo Professional ever again. If you want to extend, you can extend it even 5 times. Do it for 10 years if you feel like, do it for 15 years. But whatever you have to do within a day or so. And that is something which we are calling it as the Azadi offer. A lot of you go to the website and try and find this particular 19,999 for 2 years plus 6 months free, where you're getting a 50% discount and 6 months of additional along with model portfolio and optimizer. I must point out to you that this is not available on the site. This is only for Mojo Professional users who are attending this particular webinar. So Adrian will put this up as a link. You can immediately subscribe that link. You can save that link, but make sure that you don't delay this beyond 24 hours, because we have already started saying this offer is ending now. So make sure that you would have subscribed to it. So with that note, let's go and deep dive, as we always do. That I always talk to you about 2 set of investors. One is the investors who have the ability to invest, but they don't have the required time. They need expertise. This presentation may not be the right presentation for them. The typical approach that we would like them to have is to follow the model portfolio approach, because that's where you do not need to track. We do the tracking for you. We do the selection process for you. And the only 2-3 things that you need to keep in mind, and these are things that are not just for educational purposes, these are things that I personally follow myself, is that do not have more than 1 to 2 model portfolios. Keep adding it. Do not worry about portfolios being down 5%, 10%. That's a matter of time. You have to keep adding on to 1 or 2 strategies. Don't have 5 different strategies, because they will ultimately cannibalize each other. Keep investing more in model portfolio that is showing you a upside link, which means that is showing you a upswing. Keep adding more money, very simply speaking, to that particular model portfolio. Do make sure that whenever you get an advice on getting out of a stock, because if you have a model portfolio, when we tell you to get out of a stock or buy a new stock, please make sure that you follow that instruction carefully. And stagger lump sum if you're starting now and investing over maybe 3 months period. So if you're starting now, you've just taken or you are now taking a Mojo Professional membership, or if you're trying to add new money, you can obviously stagger it over 3 period of time, over maybe 3 months of time. How much can you park? You can, as you guys know, in the model portfolios, you today can make around 5 model portfolios. The investment amount limit out there is a minimum of 1 lakh rupees to a maximum of 5 crore across every portfolio. So if you have 5 portfolios, you will have say 5 lakhs, 1 lakh each in 5 portfolios if you want, or you can have up to 5 crores in each portfolio. So the total range is 1 lakh to 5 crores for one portfolio, and you can create 5 such portfolios. It's an excellent feature. I don't think so anybody in 19,999 for 2.5 years, which we're giving for 2 years and 6 months, gives a facility where you can create portfolios worth 20-25 crores. 1 crore is the maximum, so 5 crores is the 5 model portfolio limit. So for 5 crores, you can subscribe to that Mojo Professional pack. If you want to keep it as long as 10 years, 15 years, obviously that goes as free. Now, let us evaluate what has happened on the CAGR returns. Aggressive is still going at around a 40.7%. BSE 500 during the same period has done a 12.6%.
The absolute return is 282% versus 81% on BSE 500. If you look at the moderate portfolio, it has done around 26%. Absolute of 215%. If you look at a conservative portfolio, it has done a 19.1%, which is an absolute of 139%. All three portfolios in the longer duration, not in the last, say, 3-6 months, but in the longer duration of 5 years, as we have taken out here, has given a huge alpha to the index. If you look at aggressive portfolio, it has given a 18.1% CAGR alpha. When I say alpha, that is the outperformance to the index on a 5-year basis. If you look at moderate, it has done a 13% CAGR alpha, which is higher than the index year on year. And if you look at conservative, it has done a 6.7% on the index, which is over and above the index. Now, type 2 investor, mental courage and patience. Most important thing, consistency of approach and thought process in all market cycles, and the concept of headwinds and tailwinds that you can bear. When you have headwinds, you need to be patient. When you have tailwinds, you need to be less greedy. So it is not that when you get the tailwind, everybody's portfolios are flying and you don't have to control what your emotions are. You need to be less greedy at that time. And when you have the headwinds, you need to have more patience and belief in the investments that you're doing to stay in the game over a longer period of time. Equity market investing game, as you know, is not a 3-year, 5-year cycle. It is something, if you have to create disproportionate wealth, it is a longer period game that we need to play. And always be very truthful. You may not be truthful to the outside world, but you should always be truthful to yourself. You should basically look at what kind of returns you're generating yourself. And if you feel that you are beating the experts and if you're beating others, it is fine. You should do this approach yourself. If not, then again, park your money in the model portfolio, because there's no point. We are not playing an ego game here to try and fulfill our egos. We are actually this ego is fine till the time that we are sitting in a social circle, but this ego is not fine when we look at our own Excel sheet and our portfolio trackers and see the kind of returns that we are making. I think the most apt thing out there would be to get an expert to then look at it. So, please make sure that we are not following or we are not falling in the classical trap of the egoistic investor. So now let's look at our whole grid of evaluation that we do. The annualized returns of the strong buys is at 79%, buys at 51%, sell is at 14%, strong sell is at -8%, benchmark at 13%. We haven't presented this slide for a while. I wanted to present this back to you. Catching the multi-bagger trend, we do data analysis across the full market. I think why we take a lot of time looking at the data is primarily because we look at the market trends of the overall market. We then catch the right market cap, and then we go down and look at the stocks in that market cap. Now, let's look at some of the possible multi-baggers. If I can get the full screen on this. The current top 20 Mojo stocks are the following. You have Fine Organic, you have ITC, Andhra, you have Coromandel International, Schaeffers India, Tata Elxsi, Varun Beverages, Page Industries, Blue Dart Express, GMDC. This is a list of the top 20 Mojo stocks that we have given out here. The current week, the Mojo stocks market cap. The Mojo stocks market cap, the total of the Mojo stocks that we've got, large cap contributes to around 45% of those stocks. Mid cap contributes to 35% of those stocks, and small and micro cap a mere 20%. So there is obviously a lot of large cap inflow that has come into the Mojo stocks, followed very closely by mid caps, and the pie of the small and micro cap has reduced a lot over the last time that we did this presentation to a 20%. Now, if you look at the market cap category of allocation. The market cap category of allocation, which is the difference out here that we are saying for the market cap allocation IP that we've created. If you look at what the market cap IP is saying, it is actually saying the inverse of what the Mojo stocks are doing, which basically means that although the concentration of Mojo stocks towards large and mid cap is very high, but our current week large cap, mid cap, small and micro cap strategy is actually the other way around. It says that we should have 10% in large caps, 30% in mid cap, and as high as 60% in small and micro cap. Now, it is a dilemma that we need to address because we do not have those many Mojo stocks to allocate 60% into small and micro, but we'll still go through the whole list and try and see what we need to do out there. Let's go back and check our hypothesis that does choosing market cap based stock work. If we do not go with the allocation of the Mojo stocks into large, mid and small cap and put an extra allocation point of the market caps on the top of it, does it really work? Now, what we've done out here is that we've created a model portfolio of the market cap category and the stocks that were chosen within the market cap category, and we compared this with the most aggressive portfolio that we have, which is in the model portfolio category, which is the aggressive portfolio. And if you see typically similar amount of time, 6.28 years or a 6.58 years, the market cap allocation strategy has actually created close to 30% higher returns than an aggressive portfolio. So obviously, there is a validation out there that in 6.5 years, if you were following a market cap allocation strategy, you would have generated a 52% CAGR over the last 6.58 years versus an aggressive portfolio which would have generated or which is generating currently a 40% CAGR across the last 6.28 years. Now, inflection point, and this is a lot of data. This is somewhere a picture slide. So if you want to take, you can take a picture that what actually happens to the Mojo stocks. Now, if you're looking at what actually happens, I think we need to break a lot of myths out here that whenever a Mojo stock comes in, we should immediately buy it or we should get into it, because if you look at it, I'm going to go table-wise table. So let's go to the first table. If I go to the first table, that is the overall 2 to 3. If you were to look at inflection point, this is the first table which considers all the stocks in the Mojo stock category. Now, if you look at all the stocks, the real return of the stocks comes when a Mojo stock remains a Mojo stock over a 6 months to a 1 year period, or maybe at minimum a 3 to 6 months period. Now, this is at an average level. So please, when you get a Mojo stock which kind of runs itself out in the first 1 month, 2 months, don't think that that can't happen. It can happen, can happen. But overall, for 70, 80 stocks, a Mojo stock actually starts working beyond a 3 to 6 or a 6 months to a 1 year category. Now let's look at the second box, which is the second table, which is specifically now talking about the large caps. The gestation period of large cap in the Mojo stocks to give you relevant return with a high success rate has gone to 6 months to 1 year category. You will see the green band out there. In fact, the higher return comes from more than 1 year category. That means a stock, a Mojo stock that remains in the Mojo stock category for more than 1 year, the benchmark, the performance is 118% versus the benchmark of 44% with an absolute success rate of 100%. 6 months to 1 year large caps, performance is 53% versus a benchmark performance of 22% with an absolute success rate of 93%. So very clearly, when I'm looking at choosing a large cap, I need to be in a 6 months plus period. We do not need to, it just makes the current list of Mojo stocks in the 1 to say a 3-month category very irrelevant for me when I'm looking at a multi-bagger pick, because I'm looking at two things. I am looking at higher return and I'm looking at chance of getting that higher return. In both the categories, 6 months looks to be a better category for large cap. Now let's look at the next three tables. One is the mid cap. If you look at mid cap, 3 to 6% is where the performance starts coming in, and beyond that. So 3 months is a wait period for a mid cap to start giving you, say, a 19% over a benchmark of 9% with a success rate of 73%. If you wait for 6 months, look at the jump in the first table. 6 months to 1 year, the performance becomes 87% versus a benchmark of 18%. And look at the success rate, 96%, right? And more than 1 year, it is 218%. Benchmark is 35%. Success rate is 100%. Doesn't this say, very contrary to what you believe, that let us stay in a stock or let us buy a Mojo stock which comes into the new list and go in? What this basically says that a Mojo stock that remains for 3 to 6 months and beyond creates disproportionate wealth with a disproportionate success rate. Let's look at the middle table, which is the small cap table. Again, if you are in here, the gestation period reduces 2 to 3 months. If you look at 2 to 3 months with a 78% absolute success, the performance is 32% versus markets of 8%. 3 to 6 months is 14% with 89%, and 6 months to 1 year, again, it is 81% performance versus the benchmark of 24% with the absolute success rate of 94%. Whenever you are picking up stocks yourself, make sure you would have taken the picture of these two slides. It will tell you the cost of excitement to get into Mojo stocks now, or the excitement of getting into Mojo stocks when they cross 3 to a 6 month trigger, which makes better sense out there. If you overlay that by a high score, what happens? It didn't give me the screen. So now, sorry, give me my face, please. Okay. Now what I'm trying to tell you is something that you need to understand in depth on this particular slide. We are trying to capture two things. We are trying to capture a success rate and we are trying to capture outperformance. We are trying to capture these two things. We are not in hurry to get into a Mojo stock. We are not. You are investors who are managing your own portfolios. I am assuming that's the reason you are on this particular webinar today. And when you are on this particular webinar, we are trying to manage that. We have to catch a stock that gives disproportionate return, and we have to catch it at the right time. Which means that the return has to be higher, success rate has to be higher. So these two parameters are very, very important. So whenever you have aaj ka maal, taza maal, it may not work. Whenever you see a stock is being patiently been a part of the Mojo stocks for a 3 to 6 months and beyond period, I should buy that stock. Now, what is the additional masala on this? The additional masala, which I always say, that the higher the score, see, the stock has already been there for 3 months, 4 months, 5 months, right? If the stock is at a 70, if the stock is at a 75, the chances are that it may just go down, right? If the stock is at 85, 84, the chances are that even if there is a flat quarter result that comes in, it will still stay in that list for the next 3 months. This is a very important thing. I'm telling you the inside thing, how I would look at it. So I would say 3 to 6 months. Then I would look at what kind of a score height are they at. With a small dip in the market, with a small maybe 5-10% correction in the market, maybe a flat result, will this stock go out of my Mojo stock list? If not, then I will invest in those. That means that the overlaying of all of this is also the height of the score that the stock is in the Mojo stock category. So this is very important, and that's why, sorry, I told you to see my face. Let's go to the next set of data. Large cap 6 to 12 months, mid cap 6 to 12 months, small cap 3 to 6 months, micro cap 3 to 6 months. This is a summation of that slide. If you want, you can take a picture of this. Adrian, give a full screen to this, please. If you want, you can quickly take a picture of this. When you look at Mojo stocks, these are the filters we need to look at. 6 to 12 months, mid cap, 6 to 12 months, small cap, 3 to 6 months, and micro cap, 3 to 6 months. Now, what is the return sweet spot? We have seen for how much time they should be in the Mojo stock list, but is there also a return sweet spot? And across categories, we've seen the return sweet spot. If you see the overall, if you see large caps, if you see mid caps, small caps, that the stock should have at least done 20% return. So now if you were to look at the 20% marker, and if you were to look at the success rate of time frame, which is 6 months or 3 months plus, depending on this particular category, you have an equation. So if I were to edit this, I don't know if I can edit this, can it still show? No? Okay, let me just edit this so that you can take. Yeah. So this becomes your master slide. If I were to add one more point on this, then I guess we would have had so this becomes your full philosophy. You have the filtration of time, you have the filtration of returns, and you have an overrider that you're looking at with the highest score. If today I was to scan across the whole of the Mojo stock list, there are only 3 stocks that qualify this. There are only 3 stocks that qualify this, which are the following: 5 months, 8 months, 3 months. If you know, I have taken the large cap as 6 months. I have taken mid cap again at 6 months plus. I have taken small cap at 3 months because it shows that 2 to 3 months is where the inflection point comes. Returns since they were added is 31%, 72% for Fine Organics, and Andhra Paper is 35%. So ITC, which is a current score of 88, I'm very happy. Fine Organics, which is a current score of 90, I'm very happy. It has also stayed 8 months. Now, even if it goes down a little, I'm not worried, because if the score goes down a little as well, I think it will still play the magic on the longer duration. And if you look at Andhra Paper, which has stayed there for 3 months, but it is at 87. So if you look at those, again, now if I were to go back to that slide, Large cap 6 months, ITC is 5 months. Returns over 20%. Mid cap 6 months, we have taken a mid cap of Fine Organics 8 months, 72% return. Small caps 3 to 6 months, we have taken a small cap here, which is Andhra Paper, 3 months and a 35% return. So this is a perfect list that I could today find. I think since the time that I've been doing Multibagger webinar, this is the first time that I got a perfect list to see out here. Let's look at what is happening to the whole bit of the very interestingly, this is a very interesting point that I want to show you today. If you remember that we had stopped tracking this particular portfolio, sorry, I'm just trying to take that multi-bagger portfolio out. Yeah. This was a 6-month-old list. I think we've shifted in this office 3-4 months back, and before that maybe 2-3 months. I haven't touched this for 6 months. So we haven't done, I obviously cannot do any changes to this till the time I come and present to you. So we haven't done any changes to this over the last 6 months. Now, very interesting thing. A lot of you guys say that nahi yaar, aapka hold nahi chalta hai, aapka buy nahi chalta hai. Now look at all of these stocks, right? The first stock, there are out of the total 1, 2, 3, 4, 5, 6, 7, 8 stocks, there were 4 buys. There are still 4 buys and strong buys. Look at the return of these stocks. So LG Balakrishnan, it's a 15% up. Maharashtra Seamless, this is a portfolio that we haven't managed. This is a portfolio that we haven't managed over the last 6 months. Maharashtra Seamless has done a 42% return. Vardhaman, it came to hold. National Aluminium, it came to hold. They went down 30% odd. If we were managing this portfolio correctly, we would have gotten out of them and gotten into strong buy stocks. RHI Magnesita that we had added is 11%. That's one stock. Scheffler's India, if you see, that is a 61% return since the time we added. And Hindalco and JLT are down. So, but our allocation to obviously the 2 down stocks, which is Vardhaman and National, was very low. So overall, without in the last 6 months, a lot of model portfolios may be down, but in the last 6 months, this portfolio has actually generated a 18% positive return. We had booked a lot of losses before that, if you remember. But if I were to look at the last 3 to 6 months, it has generated a 18% return, which is unbelievable. I don't think so any of my portfolios have generated 18% return. But the cost of that is that we haven't managed this very well. So today what we are going to do, we are going to manage this portfolio in the way that we should have done it. And we should continue doing that maybe every fortnight so that you guys can follow it. Now going back to my presentation. Sorry, are you guys on this? Okay. What are we going to do is move out of the following 4 stocks, which is Vardhaman Textiles, JTL Infra, National Aluminium and Hindalco Industries. So I'm going to now sell those at market value. Just give me 1 minute to complete this. So this is what it does. We are keeping back 4 stocks, which is all the buy stocks, which is LG, Maharashtra Seamless, RHI, and Schefflers. Now, if you see, all of these stocks are buy or strong buy. 3 of these stocks are Mojo stocks, apart from Maharashtra Seamless. But I am happy to keep Maharashtra Seamless because it has given us a 42%. It is on an uptrend. LG Balakrishnan, as you guys know, is on an updrive, and it is also a Mojo stock. RHI Magnesita is at 11% down, but it has got a score of 70. I would still want to keep it at least for the next fortnight. And Schefflers India, obviously, it is a 84 score, and it has already given us a 61% return here. So we will keep that. Now comes to adding the stocks. So if you go back here, we are going to, this has generated approximately a 6 lakh cash, and I will show you the full portfolio. We'll show you how it has shaped out. We will invest all the amounts today because I told you that the kind of 3-factor approach that we have taken, I don't think so over the last 6-8 months I've got a perfect mix of, I've got a one stock from large, mid and small, which has qualified all the 3 big parameters. And we are looking at ITC 2 lakhs to invest in 2 lakhs out of the 6 lakh cash, mid caps, fine organic 2 lakhs and small cap 2 lakhs. So let's add ITC first. We'll add fine organics now. And 460 stocks of Andhra paper. So this becomes our new portfolio. I'm going to take this and take a screenshot of this. And give me a second while I paste this onto our presentation so that you can take a screenshot of this. Okay. So now we've reallocated the portfolio. We have kept LG, we have kept Maharashtra Seamless, we have added Fine Organic, we have added ITC, we have added Andhra Paper, we've kept RHI, and we've kept Schefflers India. I completely adore this portfolio. I think this is something that we've done good in terms of finding 3 stocks today at the current. do not see, the thing is here, you can take a picture on this. The thing is, do not be scared if the stock has been there for 4-5 months, 6 months, and it's delivered a 50% return, a 35% return, because logically what we are trying to say here is that the capacity of a stock, both in terms of success rate and in terms of generating higher returns, increases with time. And with a 98 rating, with a 90 score, with a 88 score, and the scores that we've got out here today, which is 3 stocks, Fine Organic is a score of 90, ITC is a score of 88, Andhra Paper is a score of 87. I think even if there is a little bit of a downside, we should be very happy because we've built a very, very strong multi-bagger potential portfolio out here. With that approach, before we shift on to the Q&A, this is the real last time that you are going to subscribe or going to hear from in the history of Markets Mojo about model portfolio being a part of Mojo Professional Service. Mojo Professional Service will not have model portfolios very soon. This is happening in a day or two now. We will do a big launch. Please make sure that if you want a long association of Mojo Professional Service with model portfolios, I am again urging you to at least be a 7-10 year member if you were to build your philosophy of creating long-term returns. You are getting 19,999 for 2 years, plus you are getting 6 months free. This is a 2-year price, 19,999 plus 6 months free. And as I said, that this is not available on the site. This is only available on this particular webinar and the link that Adrian will put in. With that, let's move on to the Q&A section.
Yeah. The first question is from Mr. Ram Kumar. From the ongoing recent changes explained by Dr. Mohit and Sunil, the model portfolio will be moved to infinity. I am registered till 2037. I have a few questions. First, I am using model portfolio and also I am picking stocks based on screener for my personal portfolio. Whether stock related search will no more be there for me. The second part, since it will be moved to Mojo Infinity, will you charge extra money after the migration? And
sir, if your portfolio, if you already are member till 2037, we will not charge you a single rupee. We are just housing all the portfolios under one link, which is the Mojo Infinity. So your model portfolio will also show there. Your personal portfolio will also show there. Everything that you do, whether you screen a stock, whether you research a stock on Mojo Professional, you will keep doing it like that. We are creating a one view for our Mojo Professional users so that they can see all their portfolios together, all their personal investments together in one particular page where you can even migrate. We are today doing an upgrade, migrate to Infinity model portfolios, but we will also in a week's time start launching. You can move money from one model portfolio to the other. If you are a Mojo Professional user till 2037, you are not going to pay a rupee extra. You will be utilizing the model portfolio completely free of charge, and you will be able to do all the things that you were doing on Mojo Professional exactly the same way. This will be a link which will be known as One View link, which will show you all your portfolios together.
And the last part of his question is like, since Mojo team is going to launch broker service, whether I need to transfer my shares from ICICI and Zerodha, I'm a bit confused and also hope my long time association should not get spoiled.
No, sir. The broker service will take another 12 months, another 1 year. The services in terms of licensing and all takes a lot of time. It will take us at least a year. That's what I said on Friday as well. And once that service is there, then it is up to you whether you want to transfer. See, we are going to do two things. We are going to give Mojo Professional users an option to use our broking services free, completely free. Whether you are doing a 50 crore derivative business, whether you are doing a 5 crore cash business, whether you're doing delivery business, whatever you're doing, whatever you do on a broking platform, we will not charge even 1 rupee out there, right? Because you are our advisory client. We will also give you 15 other brokers. If you are dealing with a Zerodha, if you are dealing with anybody else, you can, keep trading with them. There is no compulsion. You are a Mojo Professional user. You can use our brokerage. You can use anybody else in the market also. There is no compulsion at all. So don't think that we have to move you here and you will spoil your relationships. You don't have to do any of that. It's an added facility. I can tell you that some of my investor friends, when they use even Zerodha or even any other brokerage house, are paying lakhs of brokerage. My objective is to make that free. My objective is that if you're an advisory client, you don't need to pay anything for brokerage charges. And that is the reason we are launching this. We are not launching this as a big brokerage business. We are launching this to make sure it facilitates our advisory clients, our Mojo professional clients.
The next question is from Mr. Aniket, and it's a very common question, Mohit. Dear Mohit Bhai, when you will convert Infinity portfolio under the PMS service, currently maintained unique individual portfolio will be continued, or you will create a common portfolio like a mutual fund scheme?
No. Exactly the same way that the current uniquely managed portfolios will exactly be uniquely managed under the PMS. So there is no difference. See, the thing that you're talking about is when you have a AMC license. When you have a mutual fund, you go on a NAV basis. In PMS, your portfolios can be customized. Your strategy has to be the same, but your stocks can be customized if you come in sooner, later, or if the stock is moving out, you get suggested another stock. So the customization will exactly happen. The same portfolio will move under the PMS. There is no NAV basis. There is no one portfolio that will manage under the PMS license.
The next question.
The only one thing you need to make sure that even if you're looking at broking, if you're looking at model portfolio, have a longer period of association with us. Because the thing that normally happens is that we think of the cost. We say that, into 20,000 rupees for 2 years, I'm getting 6 months free. But when you look at your brokerage charge, you will understand that after 1 year, when we start the brokerage, and that's when you will, obviously, when you look at, we are not going to keep the price at 19,999 when we launch out there, right? But for our 10-year members, when you look at the cost you're spending on brokerage, you may be spending 50,000, 1 lakh rupees on brokerage, that you will get it free out here. So you have to, it is in your interest to make sure that the Mojo Professional membership doesn't expire, right? Because when you're trying to renew later on, obviously it will be at higher cost if the broking comes in out there. But today, if you were to look at this, all of this is valid only till your professional membership is valid.
The next question is from Mr. Acharya. Mohit sir, good evening. Is there a meaning in extending if you are already an Infinity member? And please enlighten, I want to decide as well, do we have a gifting option? Can someone share a link for extension? Because I would like to share it with my colleagues.
Yeah, Adrian will share that link with you, sir. And Mr. Acharya, if you are an Infinity member and you don't want to look at personal portfolio, manage your personal stocks and all the stuff, then you don't need to, because you don't need stock advisory service. But I have seen with my limited experience, a lot of investors who are with us, they want to do Infinity, they want to do model portfolio, and they want to have their personal portfolio as well. And in that sense, it is essential that you extend. If you are somebody whose whole money is parked only in the Infinity portfolios, then you don't need to.
The next question is from Mr. Shashank. I am an existing Mojo professional. Do I need to switch to Mojo Infinity website to use model portfolio and switcher of existing professional subscription, or is there going to be a separate app for Infinity which I need to download and use? Please clear this confusion.
See, currently there is no separate app. You have the HNI service, you click on that from Mojo Professional and you start using. Now what we are doing is that for all Mojo Professional users, we are taking their model portfolios and personal portfolios and giving them one view. So there it will say that Infinity portfolio is 0, model portfolio is 5 lakhs, personal portfolio is 15 lakhs, total portfolio size 15 lakhs, and what is the performance of the 15 lakhs out there. See, today it becomes very difficult for me as well. For example, I have Infinity portfolio, then I have a model portfolio which is aggressive, and then maybe I have certain stocks that are lying in my personal portfolio. Now I am seeing Infinity stocks, Infinity performance in Infinity section, then I am seeing model portfolio performance in model portfolio section, then I'm going to track my portfolio and seeing my personal portfolio. So what we are doing first is that we are under Mojo Infinity, we are saying everybody please have all your portfolios so that it is all one view, because then we'll be able to do huge amount of customization and intelligence for you. I would know across all your portfolios if your holding is higher in a stock. I would know if any sector is something that we are highly exposed to. I will be able to consolidate your position very well. And we are doing this one view page to consolidate. Now from here, let's assume from your personal portfolio, you want to sell some stocks and get into infinity. See, today you don't have that feature. So I have say 50 lakh rupees in my personal portfolio. I want to start an infinity portfolio. But I want to only sell the bad stocks as per our IP. So you can basically say migrate to infinity. You can add cash, or you can, from your current set of stocks, it will suggest you what stocks you need to sell to migrate to the portfolio. So it is, as I told you, at least in this year, this calendar year, this is the most difficult exercise that we are going to do to merge all portfolio reporting together. And then you can move around your portfolios by adding cash or by shifting stocks into a portfolio which then takes over.
The next question is from Mr. Avijit Mohanty. Dear Mohit sir, I am 42 and I consider myself a very aggressive investor. Have learned loss booking and switching to better stocks with ease and peace from you and Sunil ji. I am a 21-year Mojo professional member plus a 22 lakh Soul portfolio and added an additional 2.5 lakh today. When Soul was launched, I was told, as per my understanding, that a proportionate amount of Mojo Pro fee will be deducted from the Soul fee. But today no such amount was deducted from the additional fee I paid. Please correct me if I am wrong. I have a 22 lakh Soul portfolio and a 17.5 lakh in model portfolio. Some of them are out of sync and my personal portfolio is of approximately 15 lakh. Shall I continue with the same or any tweak is needed? Please advise. Thanks for the hand-holding and all the guidance and teaching. I'm a much calmer and a cooler investor right now. I'm just following the process. I'm confident that wealth building and profit is inevitable.
Mr. Mohanty, you are Avijit, I should call you. You are also somebody who's been our constant support for a long time. And I know you are very active with us. I know you are extremely participating in all our webinars and all our strategies. We've exchanged some personal notes as well. So I'm going to do this in two sessions. One is, Adrian, please take the remaining of the question because that I want to write to him separately. And to your first question, when we had launched Infinity Soul and Infinity Power, Infinity Soul was launched at a 2% and we said that we will give a complete rebate to our investors. That was the launch plan that we had done. Now, when you're adding investment, we are not doing any kind of a rebate because the rebate is already going to you. So there is no question of any kind of a rebate because when I have given if you have taken the Mojo Professional Pack for 10,000 rupees and I'm rebating that 10,000 rupees, whether you invest 20 lakhs or 2 crores, I can't rebate more than 10,000 because that's the annual you paid me. You know, assuming that 20,000 a year, 20,000 for 2 years is your average package price. So 10,000 rupees is for 1 year. If I have already given the rebate, then I've already given the rebate. So that is the reason that is not being charged out there. And the remaining set of questions is a long set of questions that you've got. I will respond to you within 24 hours on that question.
Okay. The next question is from Mr. Prasad. Is the Infinity Soul ticket size 20 lakh there right now for Mojo professional users with a subscription more than 10 years?
No, sir. It is not there right now. We've increased it to 50 lakhs now. Obviously, we've increased it to 50 lakhs is because of, you know, in anticipation of the PMS license. But we have kept or we are revising the Infinity Power to a 20 lakhs and plus. So Soul will be 50 lakhs, Infinity Power will be 20 lakhs. And model portfolios for non-Mojo professional investors or professional investors whose subscription expires will be at a minimum of 5 lakhs at a 2%. This is not valid for all the Mojo professional users who already have a model portfolio. You are going to get it free till the time that your subscription lasts. But your minimum ticket sizes will be Infinity Soul at 50 lakhs, Infinity Power at 20 lakhs and model portfolios at 5 lakhs, which is only for the charge users. And this is something that will get deployed in this week itself.
The next question is from Mr. Kumaran. What is the real difference between your model portfolio and Mojo Infinity? Not the investment value, but the logic, the policy, and the real return in both the cases and the risk involved.
So, Mojo Infinity works with the market cap logic. So Mojo Infinity and the Infinity Soul portfolio works with a market cap logic, which basically means it's the most aggressive portfolio that we've ever done. It can go it studies the whole market cap of the market, and it can go 100% into small cap also, and it can go 100% in the large cap also. So today, as you know, it is allocated around 60% in small cap, 30% in mid cap, and 10% in large cap. I showed you that allocation out here. That doesn't happen in model portfolios. Model portfolios, we have given the range that you can only go up to here, you can only go up to here, or you can only go up to here. Like in conservative, we don't take exposure to small caps, we only take exposure to large and mid. In moderate, we take only 25-30% exposure to small. And in aggressive, we don't take more than 30-40% exposure to the small cap category. So it is a managed risk exposure. Infinity is a exposure that can go 0 to 100% in small, mid, and large cap, and hence it is a highly aggressive, high risk. I repeat, it's a high risk portfolio. When we had launched Infinity Soul, the outperformers to the most aggressive portfolio that we had, which was model portfolio aggressive, the outperformance was in excess of 50% CAGR. So 50% on this. So, you know, it was showing a 60% CAGR versus a 40% on on the model portfolio aggressive. That was the extent of outperformance.
The next question is from Mr. Sunny. With the broker integration in place, they would know the portfolio construct and start their own service. How are you planning to tackle such issues in Infinity and model portfolio? Please enlighten us on the same.
Sorry?
With broker integration in place, they would know the portfolio construct and start their own service. How are you planning to tackle such issues in Infinity as well as model portfolio? Please enlighten us on the same.
So, see, the thing is that if the brokers have to start this kind of a service, they will directly talk to us. Now, in your demat, you just don't have 6 stocks, 10 stocks, right? And I don't think so the broker is going to replicate. It is against the law to look into your demat account and then replicate a portfolio. So that is not something that a broker can do. It is not legally allowed. So you don't have to worry that the broker has access to your demat account and he is trying to replicate your performance out there just because it is us. I feel very happy, Sunny, when you think that we are that big that people will start copying us. But I think that situation may come. But it is not that the broker is going to look into demat accounts and try and replicate what kind of stocks people are buying, so they will replicate a portfolio. And who are they going to suggest? So that's not something that we've seen with any of we deal with almost every broker in the market. But that's not something that they're even interested in. And see, the big thing out here is that today, even if you call as the discount brokers, everybody is trying to charge 20, 30 basis point, 40 basis point. You are not a revenue model for them only. The reason is, Sunny, you and me are not a revenue model for them is primarily because they are not getting paid for your performance. I get paid only when you perform, right? They get paid either on 2 ways. One is the number of trades that you're doing, if it is per transaction, and the second is brokerage. So they are interested in brokerage and they are interested in number of trades. So they will make sure that you trade more and more. And that is the reason to virtually kill that model. We had decided that when we come out with our brokeraging, it has to be a 0.0000 everywhere. We are not going to charge anything to our Mojo professional users. We will call them as our advisory clients, as our advisory investors, and anything that they do. I told you that you can do a 500 crore turnover. It doesn't matter to me because you're my advisory client. It has to be done free. For me, broking is an enabler. It is a transaction model. And I'm only giving it to my Mojo professional users so that they don't have the hassle of updating their portfolios on the site. You know, price आया उसके बाद when I was going and trying to trade, then उसका price बदल गया, impact cost आ गया. I don't know where to go and update. आपका auto update हो गया. So I'm trying to remove all of that hassles by putting in the transaction engine. And as I said, when we put in our transaction engine, the other 15 brokers also we will offer you. So you can do trading with anybody. That is not a revenue model for us.
The next question is by Mr. Raj. Based on your prediction for 2027, what kind of wealth can be created for Infinity portfolio? As per your backtest, you did show that 1600% approximately. Your view will be highly appreciated on this topic for a long-term wealth creation journey.
See, Raj, we have done a backtesting. I can only tell you that when we started model portfolios and we backtested our model portfolios and the returns that we look today, because I'm talking about 2016 now, the model portfolios are done way better than the backtesting. So today, if we have done the backtesting of Soul, Infinity Soul, and Infinity Power recently, Infinity Soul, they are still showing huge amount of promise according to me. As I told you that I will not be able to predict a return because that is against regulations. But I can tell you that I would be terribly disappointed if they don't fulfill the promise at which we had launched them.
The next question is from Mr. Vikas. Hi Mohit, can we build a position of 10% of our capital in the stock of the month suggested by Mojos? We should apply all capital in one go or split it in 2 to 3 parts.
See, you can do, 10% of your total capital is something that I would not know where your rest of the capital is. But, because for example, if your 80-90% of the capital is lying in fixed deposits or in debt instruments, then that 10% becomes irrelevant. I personally feel that whenever you have allocation, if you have 100 rupees allocation, you should allocate over at least a minimum of 10 to 15 stocks and a maximum of 20-25 stocks. So that's how I would typically say. I have yet to go outside of the 25 stock basket. I don't go there. And a minimum would be maybe 5-7 stocks. So accordingly, you can allocate that.
The next question is from Mr. Sham. Are multi-baggers generally small or micro cap? If not, can you give it an example?
No. Mastech, for example, Saregama, right? Small to mid cap journey. So none of these multi-bagger doesn't mean multi-bagger is what? Well, theoretically speaking, multi-bagger is a stock which crosses 100%, gives you 200, 300, 400% return, right? That is what multi-bagger. That means that it's gone multiple. It's multiplied, right? It doesn't mean that multi-bagger has to be a small cap or a micro cap. You can have a multi-bagger which is a large cap also. Mastech, when we got in and got out, it delivered a return of over 535%. Similarly, Saregama was, I think, 400 odd percent. It is there on the list out there. Now, if you were to look at, maybe I can do a screen share and show you some of the multi-baggers. Just give me 1 second. Okay, guys, can you give me a screen share? So here, if you see, go to this full list here, right? You will see Mastech mid-cap, our top 5 multi-baggers, right? So if I were to see till the list of Rajratan Global, maybe, you have the biggest return that we gave was on a mid-cap, then a large cap, Loris Lab, Mindtree, Alkai Amines, TN Petro. So that was the first small cap, but that came as, 1, 2, 3, 4, 5, 6th, then mid-cap, small cap. So if you see the top 10, there are only 2 small caps. Rest have been large and mid. And you can see the returns here on the green channel that Mastech was 491% from an entry to exit when we suggested. Saregama was 379%. Loris Lab was 282%. Mindtree was 280%. So you can see it out here. Now, even if you see the whole set of Mojo stocks, this is the total set of Mojo stocks that we have given so far in our life, right? If you see most of the stocks, the highest loss that we have taken in Mojo stocks is 29%. So less than 30% has been the highest loss. This is all the losses that we took when we did an exit call. And the stocks are maybe 30% out there. But across, if you see, the highest gains have been in the tune of almost 500%.
The next question is from Mr. Ashish. Dear Mohit, I'm in a situation of advised portfolio, model portfolio that I started in Feb 2022, which is up by 12%, Soul, which is up by 9%, and Power, which is up by 6%, a total of a 3.26 crore portfolio. Whereas I don't know in which portfolio I should add more funds, since model is with the highest returns, and therefore should I add it over there or in Soul or Power?
Which model portfolio do you have? I'm just trying to read your question again. 12% in the model portfolio, Soul is 9% and Power is 6% of. I would think that you, looking at this, you should increase your allocation to the Power portfolio. So take it up to a 12%. Without doubt, because according to me, the Power portfolio is designed very well in a large and mid-cap journey. And there may be a big, large and mid-cap journey coming in the next 6 months. So I would say that you are already at 9% in Soul. Take this Power up to say at 12%, 10 to 12%, and then we will start filling up the model portfolio again.
The next, it's an appreciation message from Mr. Ashok. Sir, I love all of you and Mojo, and I'm right now in USA, and I'm from a middle class family. When I did not join Mojo, that time I thought of creating wealth was something different, but I haven't answered that. I started my Mojo journey in 2020, and that time I was trying to start with the Mojo service, and I did not expect such kind of returns the way I got in Mojo. Now I've taken a 10-year subscription, and I'm also a member of Infinity Soul. And I trust you so much with my wealth creation journey and making done with Mojo and all of you, sir. Right now I'm sleeping very well because I trust you, because in the night the Indian markets are open right now. I think I don't need anything and don't go anywhere because Mojo and you are there with us. Thank you, Mohit sir, and your team. And I'm very excited to meet you, and thanks again. Whenever I come to India, I'll definitely meet you.
Thank you, Ashokji. Thank you so much for kind words. I can tell you nothing gives us more motivation than a little bit of kind words from you. Thank you so much. We work 24/7 relentlessly to make sure that we do a bypass of all the negative returns, try and create positive returns. But at the same time, as I told you, there are the true things that we follow, which is number one, which is our philosophy, is to be trustworthy and to be honest in front of our customers. And B is that we have to make sure that 100% of our investors have to make money in the longer run. So we are very clear in our approach, and that is something that everybody in Markets Mojo follows. We have a lot of points on which we lack on, and trust me, we are trying our best to improve on those points as soon as possible. But these two virtues, you will never see us getting compromised at all, which is to stay honest in front of you and to deliver returns. Thank you so much for your compliment, sir.
The next question is from Mr. Suresh Aital. What does it mean as a nominee for Mojo Professional? How it works if I renew Mojo for 10 years? If nominee has the option to use Mojo after the demise of the applicant, how does that work?
Yes. So, in fact, we have given all the Mojo Professional members, if there is a death of a Mojo Professional members, they can freely allocate this particular membership to their family member. In fact, what we had also given, Sureshji, was that if you are a 10-year plus member, we had said that we will add another 10 years so that to your wife or to your child, whoever you hand it over to. So we had given certificates of this to 10-year plus members, and we said that, for example, if you are an 11-year member, we will add another 10 years, so it will become a 21-year member if anything happens to you, so that your family can continue with this. Now, there are a lot of issues in terms of change of email address and all of that stuff. We've just got our compliance head who's joined us from Sher Khan. He's setting up a process. Very soon, in a week's time, we will send you the nomination form again in case we need to take some members. But please ensure that everybody fills up those nomination forms, and it is an offer from us to all the Mojo Professional 10-year plus members that we will make sure that we add another 10 years to it.
The next question is from Mr. Rajvi Mittal. Hi Mohit ji, good evening. Just want to know if we can split the Markets Mojo subscription for gifting purpose, I mean like 2 years and 6 months to be spread out between 3 friends of mine, 2 getting 1 year each and 1 getting 6 months subscription. If possible, what is the procedure to be adopted and how to go about it? Please advise.
Mr. Mittal, we've never thought like this. Currently, we don't have an option of doing this. You can take one and you can gift it out. But we don't have splitting the memberships into, say, a 3 portion over a 2 year, 6 months period. I'm really sorry, but we don't have that option right now.
Dr. Mohit, we are done with the webinar and the Q&A.
All right. So I must tell you that I am traveling to US for a month, but I would be doing another webinar on Multibagger while I'm there in the US. My purpose out there is to settle my kids who are going in for admission out there, but I would be very well connected to everybody. And at night times, I must be doing, maybe I will do some webinars during the night time there. But we will now make sure that there is discipline in continuing the multi-bagger list. We've not touched this list for 6 months, but I'll make sure that at least once in every fortnight, which is once in 15 days, we revisit the list and see if there's any change that we need to do. With that note, thank you so much for patiently listening to me and wish you a great week ahead.
Thank you everyone for attending this event. We have an interesting webinar scheduled tomorrow at 7 p.m. on the trends seen in the India and the trajectory of the Indian equity market by Mr. Sunil. Please do attend the upcoming webinar as well. Thank you and goodbye.